Hi, Chris Sorensen. I'm often asked, not only by HUD counselors, by the real estate professional, by loan officers, as well, of course, by the public, why are loan modifications failing so miserably over and over and over again? I can explain, and quite frankly, it'd probably take me about a good solid 30 minutes, but I'm going to do this in a very short time frame to give you some highlights. By and large, most people had to qualify for their mortgage between, say, 1940 and 2000. From 2000 to 2002, we started lowering the guidelines. Now, in one of our videos, I'm going to be talking about exactly what are housing ratios. But suffice to say, for now, just recognize this number. The maximum amount of debt that people were allowed to have historically was the following percentage. By the time we took your house payment, as well as all other monthly obligation, which would include your revolving debt, minimum payments on Visas and MasterCards and your car payment, child support, alimony, etc. We would add all that up together and divide it by your gross earnings. That was never supposed to be more than about 38 to 41% worst case scenario. You want to know why most modifications are failing? It's because according to the government's own information on financialstability.gov, the most recent reports are showing that the average borrower who needs help has a 79.8% back-in ratio. Again, make sure you watch the video on ratios. After they receive their average help of just a little over $500, their average back-in ratio is 63.5%. Folks, know this, that if I as a banker try to give you a loan with a debt ratio, we call it, that high, I'd be accused of predatory lending. What is the message? It's not sustainable. There is no point in somebody getting into a loan modification if they can't afford it. It doesn't do you, the bank, or society any good to get into a program where you can't afford to maintain the payments. And quite frankly, what we're witnessing firsthand is after 1 year, 50% of the people that enter into a modification are failing. And Moody's, the rating agency, is predicting that upwards of 65% will fail within 2 years based on current data. And ask yourself this question: how many months, when you are literally robbing Peter to pay Paul and you're completely upside down in equity, how many neighbors do you want to meet who just congratulate themselves on buying a home $50,000, $100,000 to $200,000 less than what you modified yours for? Therein lies the problem. Negative equity and prolonging the agony is the enemy to all. So, why are they failing? It's not sustainable. And so we hope to teach you through these videos is to make sure you understand what you can do to increase your odds of success, but I want you going into this process with your eyes wide open. Well, make sure you watch the video on ratios. This is very important, detailed information.